Good day to all of you. I'm just here to give you a little bit of an overview on the budget which went by. I'm Sunil Shah, the head of research for Access Securities. I talk on behalf of my entire team today. So, the key things to share with all of you from the budget standpoint, I'll just touch upon the salient points. First of all, from the stock market angle, stock market is driven largely by the FI investments. And the single most important number that the FIs were keenly watching was on the fiscal deficit. The target that the firm has set up for this year at 3.5% is very much in sync with what the FIs were expecting. In fact, this government had given a roadmap that they will bring down the fiscal deficit down to 3% over the next 4-year period. And last year they had given it a pass. So FIs were worried whether this year again the FM will give it a pass or will adhere with its target. So FIs are extremely happy that the finance minister, end of all of these subsidies and money realization, has stuck with his target of 3.5%. So that's extremely encouraging from the FI standpoint. The second point which the stock market was looking at was on long-term capital gains. There were fears going all around that long-term capital gains might come in one more time, and so market was very much jittery. However, that did not turn out to be, and that has again encouraged or enthused the market big time, because again long-term capital gains is non-existent or is at zero at this point of time. The third point that stock market was watching was on the service tax. There was expectation that the service tax could actually increase from 14% to 16% to align it with the GST rate going forward. However, there has been no change in that as well, so that has kept the markets happy. The fourth point was on dividend distribution tax. Government has come up with a dividend distribution tax even in the hands of dividend tax in the hands of investors whose dividend income is more than 10 lakh rupees. So if an investor is actually earning dividend income of more than 10 lakhs, he has to pay tax now. But that for market is accepted, because if you're earning that kind of dividend income and you need to pay tax, market was okay with those kind of thing. So from the stock market's point of view, this were like 3-4 points. The fiscal deficit, which was very important from the FI standpoint, the long-term capital gains tax, which did not come through, the service tax, which was flat at the same rate as was earlier, and the fourth was the dividend distribution or the dividend taxation. Moving on to the stock market and moving on to the economy standpoint, the single most important agenda for the government today is to generate employment. And for employment, government has done 2-3 things, or to kind of ease of doing business, which will encourage companies setting up businesses here in India. And for that, there have been 2-3 things which they have done. For a startup, the company which is going to get into new ventures starting from near term, they will have a window of doing away with taxes for 3 years out of next 5 years. So if an individual is starting up a company, he actually ends up paying no tax for 3 years out of next 5 years. And those 3 years are something which the individual entrepreneur can choose himself. So government has opened a huge window which will encourage huge amount of employment. The second, which existing medium and small medium enterprises face today, the problem is on the taxation front. So government has come up with a simple model of presumptive taxation. That is, a company with a turnover of like 2 crores has to just pay a tax of 16% of that. So your taxable amount is simply calculated without getting into any kind of complexities of taxation. Similarly, for professionals, they have come out with a slab of up to 50 lakhs of income. You straight away pay tax on 50% of your income. So you don't get into any litigation, any taxation authorities, and straight away computer tax liability. So that's a very, very significant point. Moving on to some of these sectors, a few initiatives that government has done has been focusing on doubling the farm income. When you double your farm income over the next 5 years, huge amount of money is going to flow in irrigation projects, in some kind of fertilizers, etc. So those sectors will benefit, and this agriculture focus is going to remain over the next few years as well. The second is increased outlay for railways and roads. So that will prop up demand for infra companies, capital goods, cement companies, etc. If you move on to other sectors on the banking side, government has given an amount of 25,000 crores for bank recapitalization. That from the market standpoint is not meeting the requirement. However, government has clearly stated that that's just of a roadmap, but it is not an end in itself. So government will review that 25,000 crores amount on recapitalization going forward. So that was some of the sectors. Broadly, one single most important point which I think is getting missed out and one should highlight is making Aadhaar as a statutory requirement. So Aadhaar card, which is currently now more than 90 crore people in the country have as of today, that Aadhaar card will be converted into an act. So going forward, subsidies will have to have an Aadhaar card and there will be a direct transfer of subsidies to the bank account. So what it means, it's a massive reform. I think it has really taken the second leg of reforms upwards in terms of making Aadhaar as a statutory act. So in future and in the past, there was a problem that subsidies were not getting directed to the right person. Now with Aadhaar card becoming mandatory, it is going to really channelize subsidy to the direct beneficiary. So that's one of the significant moves. Second is to link your small savings interest rate with the GSEC. Now what it means is that interest rate, when RBI actually wants to bring down, the PPFs etc. have higher rates, and so effectively the government is not able to bring the interest rate down. Now if the small savings interest rates are linked to GSEC, it will actually bring down the cost of borrowing significantly down. And third is delinking the tariffs of railways etc. from the ministerial level. So the key takeaway, if I were to just sum up, is government is trying to de-link economics from politics, and they have taken a step in that direction which will have an impact over the long term. So overall, budget is neutral, but there are significant things which will have an impact on the long term. I think that's how I'll sum up on behalf of my team. Again, I'm Sunil Shah, the Head of Research for Access Securities. Thank you very much for the listening.